Welcome back. About 10 seconds away from 9:22. Of course, we're right in the middle of tax season.
Yes.
And of course, if you haven't filed yet, it may seem like these rules and deadlines can be a little overwhelming. So here from Medalist Wealth Management is Matt Eilers to help make sense of all of this together. I mean, you know, I've been doing my taxes for like 5 or 6 years as an adult, right?
So is my husband.
Yeah. Well,
I might have a lot of questions today.
Well, it's actually probably more than that, more years than that. But I mean, still, a lot of this is confusing jargon to me, and I'm sure a lot of folks at home feel the same way, Matt. So tomorrow is March. You know, we're about halfway through the tax season. That just means people have about a month and a half to get these things all together. So if you haven't filed yet, you know, what should we be looking at this point?
Yeah, well, it is our favorite time of the year,
Right.
isn't it?
Yeah.
We get to settle up with our favorite Uncle Sam.
Uncle Sam, yeah,
say
that's
that
right.
tongue in cheek. No, this is a year where I think being really proactive about doing the right things is a big deal. So we can break down a few of what I'll call the bigger changes first.
Okay.
So first off, when it comes to the tax bracket situation that we're in, we remain in the third lowest tax brackets in American history for the remainder of this year. So that's really the Tax Cuts and Jobs Act. The Trump tax cuts are due to sunset at the end of this year. So there were slight inflationary adjustment changes to the tax brackets, but the tax rates in those brackets remain unchanged. So if the 12% tax bracket, the 22, the 24, those are still there. It's just there was a slight inflation adjustment, which honestly we needed. Inflation has been record. I don't know if either one of you have tried to buy eggs as of late, but
I was telling you this the other day. What was it, like $9 for like the 24
ridiculous.
pack at Meijer the other day? So
Crazy.
yeah.
So there was just over a 5% inflation adjustment to the tax brackets, which doesn't feel like a whole lot, but this is something to really look at with your tax professional or your financial professional to see if you are in a new bracket and if that creates any changes for you. One of the things that is different, and this is going to catch some people by surprise that have embraced side hustles. You know, we look at going back to COVID days when people were left to find other ways to make money. They were bored. They were sitting at home in lockdown.
They're like, I'm making this, Venmo me this for that. Or
Exactly.
things like that.
They're receiving money on PayPal, eBay, Venmo, all those different things. Well, the threshold for where those companies need to report those payments used to be $20,000. This last tax year, it was reduced to $5,000.
Oh,
Okay,
wow.
so it's significantly
It's
lower.
significantly lower. So basically what that means is if you received more than $5,000 for the sale of goods or services from Venmo, eBay, PayPal, any of those third-party online merchants, expect those 1099s and expect that you're going to have to settle up with your favorite uncle in regards to what that looks like. So that is a change, and if things don't change, the threshold of $5,000 is due to decrease to $2,500 for this tax year. So it really changes that landscape for a lot of people that are out there.
Any insight as to why things have changed that way, or why that they have made those rules now, from the 20,000 now to 5,000 and so on?
We are in a very, very serious tax deficit or revenue deficit situation as a country. So increasing tax revenue is what the IRS is always trying to do, trying to get more out of our pockets to be infused into their system, because we just have really a broken debt system right now in this country. So if they can find a way to tax it, they're going to do that.
Sure.
What is it, when you say, going back to the inflation thing, when you say that we're seeing an increased amount of inflation within our taxes, what does that mean for our viewer at home?
Yes, so
in their pocketbook, I guess.
So before you would have a dollar amount that if your taxable income reached a certain amount, it might put you into a new bracket. Those dollar amounts have increased a little bit. So it takes more money to get into more taxable income to get into that next tax bracket. So you may have a little bit more room before you're thrust into the next tax bracket, when maybe you're jumping from 12 to 22 or 22 to the 24% bracket. So you have a little bit more breathing room before that burden becomes real.
Okay.
For people who haven't started, they're like, I am overwhelmed. I don't even know where to begin. What's their very first step?
Yeah.
I recommend talking to a tax professional. I would just advise this: don't let Google be your tax professional. There's
Sure.
a lot of good information out there.
All of a
but-
sudden, you're being audited.
That's right. That's right. That's right. Speak with a tax professional and have a conversation about what does this tax year look like for you. You know, we still have there was a slight inflationary increase as well to standard deductions. So if you're an individual, we have a standard deduction of $14,600. If you're married filing jointly, that's $29,200. So this is a deduction that could potentially pull your taxable income down, get you into a lower bracket. So have a conversation so you're not missing some of these deductions, some of these credits. You know, if you have children, right? We have 3 boys in our household. 3 young boys. You could possibly, if you're eligible, receive up to $2,000 per child. There could be credits for any type of child care expenses. You could be looking to, deduct private tuition expenses, things of that nature. So a tax professional can help you sort all this out to make sure you're not missing any of those things.
So that's really the benefit of having that one-on-one discussion, saying this is our situation, and that professional would, what you're saying, be able to identify areas in which you could probably recoup some of that cost.
Yeah, absolutely. And now's the time to do it because likely you've received the 1099s in the mail. Everyone's mailboxes are filling up.
Yeah.
You've got all these documents, and now you're sitting here wondering, what in the world do I do with this? Find someone and have a conversation with them.
Yeah, I just changed jobs, so I have like 2 different tax
Yes.
forms that
Oh,
I'm
it
dealing
always
with
adds
for
extra
this
layers.
Tax season. Yeah, I know. So I'm going to have to figure that out. Obviously, you should be filing as early as you can. If we're like down to the last 2 weeks, what do you recommend folks do? Obviously, there's not a lot of time to get that done. So let's say we're on April 1st, and it's no April Fool's joke that tax day is right around the corner.
Yep. This is tax season for tax professionals. They are ready and they're willing to help, and it's not too late to get things done. You have until April 15th to file. You could file for an extension, but if you owe anything, you still do owe that by tax day. So extensions go through October 15th. Don't wait that long.
Yeah.
Get this done, especially if you're due a tax refund.
Yeah.
So that you can put that money to work for you. Because if you think about it, if you're receiving a large refund, this is not a bonus check. This is money that you essentially loaned the government for free.
You earned,
Yeah,
right?
and you're getting it back
And
now.
you're getting back with no interest that they're paying you, by the way. And you're getting your money back, so you need to get that back into your financial life so you can put it to work for you.
That's a really good point. I didn't really think about it. And also, why would you want to wait until October? Because in like 3 or 4 short months, tax season rolling right back over again. Let's talk about if you do get a refund, how can we put that best to work?
Yeah, so my advice here, as a financial professional is, if you're looking at a large refund, take at least 90% of that, which I know this could be fun money that's coming back, but try and be disciplined with 90% of it and put it back into your financial life. Number 1, I hate debt. So I think that you should go and eliminate as much debt as possible. Start with the high interest debt. Credit cards are bad. Eliminate credit card debt. Get those payments out of your life and then tackle other debt. Maybe you have student loan payments.
Sure.
Maybe there are car payments. There's a lot of different methods out there that you could take the approach of the debt snowball, the debt avalanche, whether you're tackling the largest balance first or the largest interest rate first, but throw that money at debt because that's just money that's going out the door. If you got your debt situation in a good place, save. That's my recommendation. I believe in saving. Spend 10% of your money on something fun. Go out, take a nice trip or a nice dinner, but save the rest of your money. I believe that families, especially in West Michigan, should have a fully funded emergency account. And what I mean by that is 3 to 6 months of your living expenses that are socked away at the bank. And we need to have those because we live in West Michigan. We know if we have a furnace, it's going to go out in February. If we have an air conditioner, it's going out in July.
Height of the cold,
Absolutely.
right?
Right.
Yep.
We know life happens and we need to dip into, a pile of money for expenses. The last thing we ever want to do is dip into our retirement savings accounts for something like that. We don't want to have to have our paychecks completely fund all of that because that can make things, very tight depending on your income situation. So I recommend, really boosting that emergency fund and then save for retirement.
Yeah.
Absolutely. I also think that people sometimes fear this period because they don't know, well, am I going to get money back? Am I going to owe money? If I do owe money, I don't have savings to owe money. Like, what are the consequences of not just acting on this time frame?
Well, we have to pay our taxes.
Yes.
It's not a choice.
We've all got to do it.
I hate taxes. I hate paying them,
Yeah.
but we have to do it, right?
Yes.
One of the things I do recommend, Samantha, is if you're receiving a large refund, let's take a look at your withholdings. Let's not lend the government that much money.
Okay.
In this coming tax year. So that's one of the things that can be dealt with. But speak with a tax professional. If you have concerns with how much you owe, let's make sure that's exactly how much you owe. And let's make sure there aren't any other additional deductions or credits that you can take advantage of.
Let's talk about the refunds. How long have they been taking to come back? And as the season goes on, are you expecting that to take longer just because of the amount of people still trying to file? Or have they been turning out at a pretty consistent rate?
The early bird gets the worm when it comes to this. We know that there's a lot of government positions that are shrinking right now, so there's not as many people at the IRS to process some of these returns. Things could take a little bit longer, but I recommend filing electronically. That jumps you ahead of anyone else that's filing via paper. You're going to get priority there. Make sure if you're due a refund that you've got direct deposit.
Yeah.
So you're not waiting for a check.
It's
Where's
always nice
Dave
when
Cackley?
I was going to say,
Hold
I know.
on, where's Dave Cackley? He needs to set up his direct deposit.
Well, I was going to say, having the direct deposit, it's so nice to wake up and see, oh, Uncle Sam has given me money back now, right?
Exactly.
Yeah.
It is a good little treat. And yeah, mom, dad, grandma, grandpa, electronic. I
Yeah.
feel like
Yes.
they still think the old classic mail way is the way to go, but there are better options.
There are better options. And don't expect the refund to come overnight. It's going to take longer the longer that you delay in filing the tax return.
What else should we know about tax season at this stage in the game? Again, March 1st is tomorrow, about a month and a half out from the end of tax, or what's officially tax season.
Yeah. There's not crazy sweeping changes right now to the tax situation. But what I'm always really proactive about having discussions about with families here in West Michigan is what they can do to lower their tax burden in the future. I'm not a CPA. I don't do tax returns, but we work with our clients and we engage them in tax planning, especially retiree clients. If you're approaching retirement or in retirement, taxes are a bigger deal now in this stage of your life than they've ever been before. So we need to make sure that we're taking advantage of every single measure to be able to lower that potential tax burden in the future. So, whether that is, contributing in your final years of saving to things like traditional IRAs or Roth IRAs if you're eligible, it's a really big deal. But I just recommend that people engage in a discussion with a financial professional about how they can lower their potential tax burden. Because the big question mark is what's going to happen next year?
Yeah.
I don't know. We've all benefited from a good market environment last year. Interest rates, the interest rate environment was very different. So many people were able to park their money in instruments like money markets and CDs and make over 5%, which, by the way, expect those 1099s. You're going to have to pay taxes on that.
Yeah.
But as we approach this new landscape of taxes in America, we need to make sure that we're taking advantage of the measures that are at our disposal to lower that tax burden in the future.
Yeah, sometimes I think there are some misconceptions on what you can take as a deduction or what you can take as a tax credit. Just because, at least for me, I'm one of those people that, I don't really feel entitled to those things, even though I could
or you don't
be,
count
or I
on
am,
them, right?
or I don't
think
count
there are
on
some
them.
people
Yeah.
that you see that they counted on this return, and it's like, no,
Yeah.
I don't plan on getting. I don't know. Everything I send out, I'm like, I don't know if I should plan on ever seeing it again. But that's probably not the best mindset.
And that's
either.
probably where the conversation with a financial advisor or somebody that could help you in that situation would come in, definitely.
Yeah, we look at this as it's puzzle pieces on a table. We have to help you, put
Plug
the
and
puzzle,
chug where it goes.
That's right. We
Yeah.
have to figure this out because nobody likes taxes. At least I've never met anybody that likes taxes.
Right.
So let's make sure that we have to pay them. Let's make sure we're paying the least amount possible.
Yeah.
Anything that we haven't touched on today that you'd like to add?
Now, well, the one thing that just popped into my mind is we're thinking about, where can we go and get extra credits? The electric vehicle landscape is changing rapidly right now in America. If you did purchase something like that, you could be eligible for a pretty large tax credit, up to $7,500 last year. the question of what the viability looks like that for new buyers in the future is up in the air. But make sure you're taking
Yeah,
advantage
we did
of
purchase an EV this year,
Yeah, I was
so
gonna
that is
say.
something that I will remind my husband
write
about.
that off on the, on
Right.
the taxes. All right. Well, Matt, we really appreciate your time, and of course, for all of your services, where can people find you if they would like to hit you up?
You can find us at medalistwealth.com. We're also on Thursday afternoons at 12:30. Our show In the Money here on ZZM
yeah.
13 on
Perfect.
your side.
Absolutely.
So
There you
go.
you can tune in there or visit our website at medalistwealth.com.
All right, Matt, we
Perfect.
appreciate your insight. Thank you very much.
Great
It's
to be
about to
here.
turn 9:37. We'll be back in a short while, in about 2 minutes.